In this video, learn how to make specific adjustments to your trading to succeed in high volatility markets. Hi, I'm Mike Bellafiore, co-founder of SME Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the Playbook. Watch in this video as we share in step-by-step detail recent trades in Abbott Labs adjusted and tailored for this highly volatile market so you can grow your trading account.
This trade was an Abbott ABT from this past Monday. This was a sell the news event or a gap and fail. Over time, I've been trying to get a book together or a sheet together of types of news events and seeing the characteristics which show follow through and the characteristics which show potentially an overreaction, such as we saw in this trade, where that news event that is looking like it should be a buying signal is actually reacted to maybe a little too drastically and turns out to be a sell the news. It tends to reverse. Alex covered this quite often. For this trade, the overall market this past Monday, we know we bounced about 20% off the recent lows. The end of March, we had that 1 week rally where we were able to set a tighter range versus where we had been trading off for about a month now.
Okay.
Over the weekend, coming into this Monday, the fears around the coronavirus, investor sentiment, it was fairly mixed as fears were still increasing as we're learning this might go on for longer than we expect. And at the same time, we have a stimulus that was passed last week, which could offer a macroeconomic, a positive market catalyst. So we had mixed sentiment coming into the trading session. And as for Abbott specifically, over the weekend, there was the FDA expedited the approval process for Abbott's diagnostics, and this test is going to be able to be distributed quicker and be taken faster. So the intraday fundamentals, the stock Abbott traded up 23% right as the market opened in the pre-market. We hit 23% higher from the prior close on Friday to a high of 91.11 before selling off pretty sharply, as I'll show in the next slide, to about 82.83. That high of that pre-market, that price spike, only reached 91.11, which was just shy of that 92.45 52-week high.
If you want to learn 3 real-world setups that our traders use, including the simple setup that we teach all of our new traders and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up this free registration page in the new window. So don't worry, you're not going to lose this video. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
The stock has a pretty wide ATR and enough liquidity to be able to trade it. And the short float is insignificant in this trade, but it is showing that there is a lot of, 98.7% of the float is held by people who believe the stock is going to go up.
So one thing I want to point out is, so there have been lots of leaks that companies are thinking about developing drugs to help with coronavirus. This is a huge company. This is something that hit the radar of lots of different traders as real. Is that fair to say?
Yes.
So this is not some pump and dump from a company you haven't heard about. This isn't something that's aspirational, or this isn't something that's overly aspirational for some smaller or medium-sized companies. The market and traders really took this seriously walking into the market this session.
Exactly. Rather than some PR news event, we get finally a real piece of information, some way to look forward. So looking on the longer term chart, we see Abbott has some relative strength, trading about 40% as the market opens on this day. We're trading about 40% off the recent lows. And the longer term moving averages, the 50-day, which is in yellow, and the 200-day, which is in blue, are setting up for a pretty tight range. And as we can see throughout the past year, that these moving averages have been respected, more or less. And considering that they are so close to each other and the stock is opening up right in that range, that this could set up for a potential, an exaggerated move off of these averages in one direction or the other. As we open, we're trading up about 23% higher to a high of 91.11 right as the market opens. As Bella mentioned, this was a real piece of information. This wasn't something that was just being used to get the market value up of a low float. This is a real company, and this was a real piece of news. And because of this, I had the idea where, unlike a low float and a backside, this was going to have follow through. We were one close to a 52-week high, and this was a real piece of news. We should have been able to have some follow through and strength, or at least some clear support at a higher end of that range during the pre-market.
One thing though, how much is this gapping up?
It is gapping up quite significantly. Over 20% was those highs. Having the short thesis, I tried to be open-minded, but I was considering that because we had a strong sell-off, a pretty sharp sell-off from those highs, and we were not able to reach the 52-week highs, that I would be looking for signs that this could potentially be a short play from the day. So the first sign is that using those moving averages, that those longer-term moving averages, technical analysis on the longer-term time frame, which were respected, we were not able to hold at these levels. Failed pretty quickly, and there was a strong sell-off directly off the open. We took out the pre-market view up, and we also took out the pre-market lows directly off the open, setting up for an opening range, an opening drive, pretty significantly aggressive to the downside.
Hard for a large cap like this, a real company like this that's owned by lots of institutions, not to be tempted to at least take some profits on a large gap up like this. That's why I mentioned that's why I asked, hey, that's why I pointed out, hey, this is gapped up a bunch. So you want to be keeping that in the back of your mind. I do think there was some euphoria that, hey, this is particularly a good news event, but really big large cap stocks that are owned by big institutions, when they gap up that much, people want to ring the register a little bit, at least at the beginning. And they are they're gonna have a harder time holding such a big gap up than a tech stock or low float, or something. Even though this was pretty good news, right? This is pretty exciting for lots of traders in the open. And there was something more to it. There was just something more to the psychology that this big company was getting involved and maybe be able to use its innovation to help. But you want to keep that in the back of your mind. And the other thing that we talk a lot about, which is, okay, this is a really big news event. We think this could go higher. But when it doesn't, that tells us something that gives us an opportunity to put on a pretty good trade to the short side.
So for this trade management, this was a trade that this was a company that I was able to trade throughout the day rather than just one in and out. As we saw earlier, off the open, we had those first two signs of weakness. And then as we get that pop back towards view up, that's where this chart begins. So when we were unable to retrace towards view up and reclaim view up and failed from that area, that was a sign to me that I might be able to open up the short position pretty soon. I wanted to wait for then a lower high. We then pull back a little bit and then come back.
What's the first move? So the first move on the open's what?
Sell off.
And what kind of volume?
High volume, sustained high volume also.
Okay. And how would you describe the move? Is it just a sell-off or is it a steep sell-off?
Steep, very steep.
Okay. So we got steep sell-off on high volume in a large cap that has gapped up a ton. And so you had that opening drive opportunity, which is a separate trade in of itself. And then when it pulls back to view up and something is really steep on the open, what's something that happens when it pulls back into view up?
Weak stock's not going to be able to reclaim and fail.
If something's really steep though, right on the open, and let's say you pass on the opening drive play, right? So it has that steep move to the downside. It does so on pretty good volume. you're looking at it and you're like, oh, wow, I really want to short this if it comes back and fails at VWAP. When something is really steep, though, right on the open, what is it likely to do after it's been really steep as it comes back into VWAP?
It's likely to try to reclaim and then fail off that first attempt, not being able to reclaim.
So I think you're saying the same thing that I'm thinking. We're just using different language. So it tends to leak through. It's not uncommon for the stock to leak through VWAP. So what everyone's thinking of is, all right, we've got the stock, steep down move right on the open, really good volume. I want to short it as it pulls into VWAP. Lots of traders are thinking the same thing. And then they short it just based on price as it gets close to VWAP. And then those people get squeezed a little bit and have to cover above VWAP. And then there's some other players that are a little bit confused around VWAP. So it can leak through VWAP. And then when something's just too steep to the downside, we have to understand that our VWAP as of itself is already a little bit skewed, right? Because if on the open something goes down too steeply as it's pulling back up to VWAP, our VWAP in this case might be a little bit too low. So we got to give it a little bit of room. Does that make sense?
Definitely, yes.
So the combination of all those things can cause this leaking through VWAP. And what happens to lots of traders, the lesser traders, is they put that trade on based on just price, and they get stopped out above VWAP and they move on. But that move through VWAP, if you are an experienced trader, if you understand market structure, does in no way invalidate your idea. It just is what it is. It's just part of trading. It's just one of the things that may happen before your idea starts to really work. And so you got to leave some risk budget for, hey, let me maybe take a short at the VWAP, cover it. Okay, it leaks through there. I still could be right. I still understand this. Now it turns, it starts to show the weakness again, gets below VWAP again. Let me take that short against the wick high above VWAP when it leaks through there. And let me now start my short position. And in fact, I'll take it a step further. If you can see the turn, you can see something leak through VWAP and gets a little bit too extended above VWAP, and you can see the turn, you can see it start to roll over, you can see it fight on the tape. You can really hit that hard against the high and give that a run. Make sense?
Yes, makes sense. Looking here at this next chart, I end up taking that short position when we cannot reclaim VWAP. That would have been a good entry right there, as we were just talking about. And seeing this lower high was just a further confirmation that it was time that I could open up the short position. Coming down, we have that sell-off, and we set up a low. When there's a small bounce right off.
So having said all that, in this case, and let's sort of close the circle here.
Okay.
Does it get above VWAP? Does it leak above VWAP?
No.
When something is so steep right away on the open, and then can't even have that leak through VWAP for all the reasons I mentioned, and holds pretty cleanly below VWAP so early, there should be a red flag that's raised. We should have alarm bells go off in our trading minds, which is what? They can't even have that leak through. What should we be thinking?
That there's clear underlying weakness in the stock.
Okay, good. And so, if you can see that turn again below VWAP that you feel confident about, and I think this is really where you want to use your tape reading skills, then that's a good place to be aggressive.
After the initial trade, later in the day, when the stock finally does break back up above 80, we see there's another pattern where there is this clear resistance set we cannot break up above. It's breakout failure, and I'm shorting on the as we fail at that 80.75 level. Shorting again as it's time. It looks as if we're going to get back below 80 and then continue on the trend from earlier in the day. And ultimately, I had to cover this as we failed one more time to make a lower low from that range set earlier at this dotted purple line down below. Finally, the last trade that was made in this day was after I had covered and I was flat, and I was looking to see if there's a possible chance to open up a final short position, as the stock clearly had weakness, but potentially couldn't make it below this purple line. We held underneath the 21 EMA. We weren't making higher highs, and we were getting towards the bottom of that recent range. And so I opened up a position looking to double up the size if we can make it below this dotted purple line, which was that low from earlier in the session. Once we finally do get below this line, this was the final trade, and the idea was to just cover into momentum and use tape reading skills to be able to try and find a change in character. Once the stock is coming down, it bounces a little bit higher, than 79, say 79.10, comes back into 79.25, where this final green arrow is, and there was just a clear change in the momentum and just hit out to get flat.
All right, good. And I think this really, go back to the chart. So I think this is a great example of how we're making adjustments to trade in this market, how we're making adjustments to trade a market with the volatility that's elevated, and how we're taking exits that are different than what we teach you guys a lot at the beginning for trades to hold. And so circle one, if this was a low volatility market, would be tier one, trade to hold. Circle two would be tier two, trade to hold. Circle three would be tier three, trade to hold, only getting out of the short until there's a reason to cover. But what you're doing is you're adapting to the present high volatility market, which means more momentum trading. You're taking your idea, this stock can trade lower into end of day, but because volatility is higher, there's going to be a lot more whippiness. And what I have to do is look for spots to short, and then when the stock sells off a little bit too much, take my covers. When momentum slows, take my covers, and then look for another entry and trade these move to moves. I would encourage you to think about, when you see these things turn, to really hit it hard. To think about, hey, if I only had tier one on, when I see it turn, can I put on tier two and then take it off? And then put on tier one, tier two, tier three when I see it turn, and take it off, take it off, take it off. But that momentum trading that you're doing right here is really a perfect example of the difference between how we trade when volatility is 12 and how we trade when volatility is where it is. And you have to trade differently. Your playbook's totally different. You have to think about things differently. You have to do things differently. You have to have a different playbook for things like this. You have to do that. You can't just short the damn thing and close it at the end of the day, because you're going to get whipped out in so many more of these trades. But the volatility gives you so many more opportunities to hit and run, hit and run, hit and run, short cover, where you can make more money. So that's a good job there.
To wrap it up, this is a contrarian trade, more or less. And I believe that without being able to see clear confirmations and without having a strong conviction in the trade that is then confirmed on the tape and in the price action, that taking a contrarian trade too often may get me in trouble in the long run. So I think developing the setup and trading the setup again, I just want to be able to keep a list and make sure that I see confirmations before I just agree with my bias.
Yeah, but I don't know if it's a contrarian trade. This is, you saw, to me, this gets confirmed when on the open there's a steep down move with elevated volume and the stock can't even get above you up, and you're seeing weakness there. I think you're trading there what you see. You had a thesis, you're seeing it based on the price action. All right, so good job. Really good stock selection on this one. This is one of the better ones from last week. The days blend into each other last week. So good stock selection and good example of momentum trading and how you do it in this market. Good stuff, Jake. Thanks. Now it's your turn. What adjustments have you made to your trading in this highly volatile market? Let us know by leaving a comment below right now.